Well, for the second day in a row, the market fought off early pressure to climb off a major swoon. But would-be buyers were dissuaded late in the session when Senator Ron Johnson of Wisconsin announced that he is a no on a Senate tax bill. D.C. continues to dominate the market, masking what has been a great earnings season. Coming into the week, 91% of S&P 500 companies have posted their financial results, and it was another blockbuster quarter. And while the results have been great for the second quarter in a row, good news wasn't always greeted great by investors, certainly not a lot of exuberance. Companies that beat have seen very small increases to their share price, particularly based on historic norms. And last quarter, they were actually down. They were knee-jerk selling them. In both cases, the second and third quarter, companies that missed on earnings or gave subpar guidance saw their shares utterly destroyed. Now, thus far, 58 companies have warned about the current quarter. Their overall results, 66 of companies that reported have beat the Wall Street consensus, 74% beat on earnings. In fact, according to FactSet, your blended revenue growth is 6.1%, almost twice the level anticipated on September 30th. And ironically, the super hot utility sector, I've been talking about that, they've posted the worst revenues results so far. Energy has enjoyed the best top-line growth. But really, it's all about global growth, right? A global reach. Buoyed by the weak U.S. dollar and also strong demand, multinational corporations have seen monster top and bottom line growth. Companies with more than 50% of their business outside of America saw an average revenue growth of 10%, earnings up more than 13%. That geographic reach on earnings, just the same thing. If you are outside of America, your earnings are up 13.4% on average versus 6% if you were mostly a domestically based company. Now, speaking of earnings materials, they have posted the biggest upside surprises, followed by information technology and energy. By the way, speaking of earnings after the close, a lot of earnings, and most of them really good news propelling these names higher. Restoration Hardware, I sold it too early. Crushed on the top and bottom line, sending this short scurrying. Now, remember, in a 6-month period from late 2015 to 2016, this stock dropped 75%. Everyone wrote them off. Now there's a chance they could recover all of that loss. And right now, 71% of the float is short. Cisco, by the way, posted a really good earnings report after the close, initially sending those shares, you can see, over 5% higher. And NTAP, a network appliance, posted a very impressive number, top and bottom line, and in addition, offered strong guidance, up 9%. L Brands is your sole earnings loser after the bell. They missed Wall Street consensus, and the stock is going to be under some pressure at the open. By the way, there was another loser after the close. Procter & Gamble's management, which, by the way, bragged big time about beating activist investor Nelson Peltz in a major proxy battle. Well, guess what? They're going to have to eat their words. There's been a recount, and Nelson Peltz is going to be on the board of directors. Now, the market loves the news, by the way. P&G shares are popping big time right now. So this all means that maybe the market opens a little bit higher tomorrow. Of course, all the news that we've had out there still continues, but a higher open would be relief. And, we're going to continue to see what happens. Now, if we do continue to go down, I want to share a couple of important numbers for you because at some point the market's got to find support. For the Dow Jones Industrial Average, write these numbers down. 22,931, that's your 50-day moving average. 22,400, that is a very, very pivotal number. It was resistance. It must hold a support. So stay buckled up. Should be a wild ride just for a little bit longer, but I remain very, very bullish on the economy and the market.